Now, gold, we were going to talk about that anyway, as I told you a moment ago, with the Dow at 76 at 19,959. Gold prices are down like 18% off the high of 2016. So is the polish kind of off the precious metal, or maybe 2017 is a big year for gold? I don't know, but Frank Holmes does. I'm sure he does. Frank is CEO at U.S. Global Investors. So two things, Frank. Number one, give me an outlook for gold, just simple. And then I want to talk to you a little bit about Donald Trump. But tell me, where's gold going?
Well, very short term, gold is extremely oversold. When you look at rolling 60-day trading price action going back for the past 10 years, we're down what's called 2 standard deviations. So mathematically, the odds are about a 90% probability of a rally between here and the end of January, which usually fits into the seasonal pattern of the Chinese New Year, is usually an inflection point for a peak in the run of the price of gold.
Okay. Makes sense.
The other thing that's really important for your listeners is real interest rates. That is, that everyone focuses on nominal rates, what the bank's going to pay you, but you have to subtract what's called real interest rates, the CPI number. So right now, what we've seen in the past since gold has fallen is that the 2-year government bond yield, cost of money, is up over 50%. And there's an inverse relationship. So anytime we see this type of movement in real interest rates, then we see the price of gold go up or down.
Okay, I said I wanted to ask you about Donald Trump. You're starting to talk about that with the interest rate conversation. Give me a Trump administration outlook for interest rates and for inflation, if you can.
Well, if you look at his scenario for keeping jobs in America, we can experience 5 to 10% inflationary rates rising if all of his ideas come into fruition. So that's probably the biggest risk we have to deal with. But that's going to take another 2 years before that unfolds.